In the ever-evolving landscape of digital currencies, Bitcoin has emerged as the frontrunner, captivating the imagination of investors, technologists, and the general public alike. From its inception in 2009 as an innovative peer-to-peer payment system, Bitcoin has grown exponentially, transcending its original purpose to become a significant investment asset. This journey reflects not only the growing acceptance of digital currencies but also the evolving understanding of what they can offer in terms of financial flexibility and investment opportunities. Amidst this backdrop, the concept of a Bitcoin exchange-traded fund, ETF, has gained substantial attention. An ETF, a type of investment fund traded on stock exchanges, holds assets such as stocks, commodities, or bonds. A Bitcoin ETF, therefore, would offer investors exposure to Bitcoin without the need to directly purchase, store, and manage the digital asset, simplifying the investment process significantly. However, the path to launching a Bitcoin ETF has been fraught with regulatory challenges and skepticism. Recently, the crypto community experienced a jolt when a tweet falsely announcing the U.S. Securities and Exchange Commission's (SEC) approval of a spot Bitcoin ETF circulated, following a hacking incident. This event briefly stirred the market and brought to light the fragile balance between regulatory oversight, market expectations, and the impact of misinformation. This incident serves as a focal point for our exploration into the world of Bitcoin and the significance of a potential spot Bitcoin ETF. In this comprehensive discussion, we delve into the journey of Bitcoin, the mechanics and importance of a spot Bitcoin ETF, the regulatory landscape shaped by the SEC, and the broader implications for the future of Bitcoin and cryptocurrency investment. Bitcoin's emergence in 2009 marked the beginning of a new era in digital finance. Created by the mysterious figure or group known as Satoshi Nakamoto, Bitcoin introduced the world to the concept of a decentralized digital currency, underpinned by the revolutionary blockchain technology. Initially, Bitcoin was perceived primarily as a peer-to-peer electronic cash system. However, over the years, its role evolved dramatically, embodying not just a currency but a unique investment asset. In its early days, Bitcoin garnered attention primarily from tech enthusiasts and libertarians. But as awareness grew, so did its appeal to a broader audience, including investors looking for alternative assets. Bitcoin's decentralized nature, limited supply capped at 21 million coins, and its position outside traditional financial systems made it an attractive option for those seeking a hedge against inflation and currency devaluation. The first significant surge in Bitcoin's value occurred in 2013, putting it on the radar of mainstream investors. This surge was the beginning of a series of price fluctuations, highlighting both the potential high rewards and high risks of Bitcoin investment. Despite its volatility, Bitcoin began to be recognized as digital gold, a store of value and a safe haven in times of economic uncertainty. The introduction of Bitcoin futures in 2017 by major financial platforms like the Chicago Mercantile Exchange, CME, and the Chicago Board Options Exchange, CBOE, was a pivotal moment. It signified the entry of Bitcoin into the world of traditional finance and offered legitimacy, attracting institutional investors. Bitcoin futures allowed investors to speculate on the future price of Bitcoin without actually holding the asset, thereby providing a way to hedge against price volatility. As the cryptocurrency market expanded, so did the variety of investment options. From direct purchases and holding of Bitcoin to investing in Bitcoin-related companies and technologies, the spectrum of investment opportunities broadened. This period also saw the rise of initial coin offerings, ICOs, though often mired in controversy. They further highlighted the expanding scope of cryptocurrency investments. However, despite these advancements, a key missing piece in the Bitcoin investment landscape has been the absence of a spot Bitcoin ETF. Such an ETF would allow investors to gain exposure to Bitcoin's price movements without the complexities and risks of directly buying and securely storing the cryptocurrency. This has been a much anticipated development, as it would not only simplify the investment process but potentially attract a new wave of retail and institutional investors, further embedding Bitcoin into the mainstream investment world. Bitcoin's journey from an obscure digital token to a highly sought-after investment asset reflects the evolution of the broader cryptocurrency market. Its journey is marked by innovation, increasing acceptance, and an expanding array of investment mechanisms, setting the stage for future developments like the potential introduction of a spot Bitcoin ETF. A spot Bitcoin exchange-traded fund, ETF, represents a significant milestone in the evolution of cryptocurrency as a mainstream financial asset. Unlike Bitcoin futures ETFs, which are based on contracts predicting the future price of Bitcoin, a spot Bitcoin ETF is directly tied to the current price of Bitcoin. It involves the actual purchase of Bitcoin by the fund, offering investors a more direct exposure to the cryptocurrency's real-time value. The mechanics of a spot Bitcoin ETF are relatively straightforward. The ETF would purchase and hold actual Bitcoin, and its shares would be traded on traditional stock exchanges. This arrangement allows investors to buy and sell ETF shares, representing their share of the fund's Bitcoin holdings, just as they would trade any other stock. The critical advantage here is the elimination of the complexities and risks associated with buying, storing, and managing actual Bitcoin. Investors would not need to deal with cryptocurrency exchanges or secure digital wallets. Instead, they could trade Bitcoin exposure through a familiar, regulated stock exchange. Furthermore, a spot Bitcoin ETF would be priced based on the actual, current market price of Bitcoin, providing more accurate exposure compared to futures-based ETFs. This feature is particularly appealing to investors who wish to have direct exposure to Bitcoin's price movements without the intricacies of handling the cryptocurrency itself. Globally, the stance on Bitcoin ETFs varies significantly. While some countries have moved forward with Bitcoin ETF approvals, offering them to their investors, the United States, with its rigorous regulatory environment, has been more cautious. The U.S. Securities and Exchange Commission, SEC, has yet to approve a spot Bitcoin ETF, despite several proposals. The hesitation stems from concerns over market manipulation, volatility, and investor protection in the relatively unregulated cryptocurrency market. The introduction of a spot Bitcoin ETF in the US would mark a watershed moment for Bitcoin and the wider cryptocurrency market. It would not only simplify investment in Bitcoin but also serve as a stamp of legitimacy from one of the world's most influential financial regulators. This move could lead to increased institutional investment and broader retail participation, further integrating Bitcoin into the global financial system. Understanding the nature and mechanics of a spot Bitcoin ETF is crucial in appreciating its potential impact on the cryptocurrency market. Such an ETF represents a bridge between the traditional financial world and the innovative realm of cryptocurrencies, offering a familiar, regulated means for investors to gain exposure to Bitcoin's dynamic market. The approval of a spot Bitcoin exchange-traded fund, ETF, carries with it a multitude of implications for Bitcoin and the broader cryptocurrency market. Such an approval would not only represent a major milestone in the journey of Bitcoin towards mainstream acceptance but also potentially transform the landscape of cryptocurrency investments. One of the primary benefits of a spot Bitcoin ETF is the heightened accessibility it offers to investors. By allowing Bitcoin exposure through traditional stock exchanges, a spot ETF would open the doors to a segment of investors who may have been hesitant to venture directly into the cryptocurrency space due to its perceived complexity and risk. This ease of access could lead to a significant influx of capital into Bitcoin, as both individual and institutional investors would find it more feasible to include Bitcoin in their investment portfolios. Another key aspect is the legitimacy and trust that an SEC-approved spot Bitcoin ETF would confer on Bitcoin. Approval by a major regulatory authority like the SEC would signal a recognition of Bitcoin as a viable investment asset. This could alleviate some of the skepticism surrounding cryptocurrencies and help dispel the notion that the crypto market is largely unregulated and fraught with risks. In turn, this increased trust could lead to greater adoption of Bitcoin by mainstream financial institutions and further integration of cryptocurrencies into the global financial system. The potential approval of a spot Bitcoin ETF could also have a positive impact on Bitcoin's price and market stability. By providing a regulated and structured avenue for Bitcoin investment, a spot ETF could reduce the market volatility associated with cryptocurrencies. This stabilization is crucial for Bitcoin's long-term growth and acceptance as a store of value and investment asset. However, the significance of a spot Bitcoin ETF extends beyond just investment opportunities. It represents a broader shift in the financial world's approach to cryptocurrencies. The acceptance and integration of a Bitcoin ETF into traditional investment frameworks could pave the way for more innovative financial products based on cryptocurrencies and blockchain technology. This could lead to a more diversified and dynamic financial market, where digital assets are a standard part of investment strategies. The approval of a spot Bitcoin ETF would be a watershed event in the world of cryptocurrencies. It would mark a significant step in the evolution of Bitcoin from a niche digital asset to an established part of the global financial landscape. The implications of such approval are far-reaching, potentially catalyzing increased investment, greater legitimacy, enhanced market stability, and the opening of new avenues for financial innovation centered around Bitcoin and blockchain technology. The journey towards the approval of a spot Bitcoin ETF in the United States has been an intricate interplay of innovation, market dynamics, and regulatory oversight, with the Securities and Exchange Commission, SEC, playing a pivotal role. The SEC's primary mandate is to protect investors and maintain fair, orderly, and efficient markets, which becomes a complex task in the rapidly evolving and somewhat nebulous world of cryptocurrencies. The SEC's approach to Bitcoin and cryptocurrencies, in general, has been one of caution and scrutiny. The primary concerns that have led to the SEC's hesitance in approving a spot Bitcoin ETF revolve around issues of market manipulation, liquidity, and the inherent volatility of cryptocurrencies. There's also the challenge of ensuring adequate consumer protection in a market that is still considered to be in its relative infancy and lacking the regulatory frameworks typical of traditional financial markets. Past proposals for Bitcoin ETFs have been met with resistance from the SEC, which has cited concerns over potential fraud and manipulation in the Bitcoin market, given its decentralized nature. The SEC has also expressed concerns about the ability to reliably and consistently verify the custody of the underlying Bitcoin assets in an ETF, which is crucial for ensuring investor protection. These concerns reflect the SEC's commitment to rigorous standards in the financial market, standards that many feel the cryptocurrency market is still striving to meet. Furthermore, the SEC's role is not only about responding to current market conditions but also about anticipating future challenges and laying down a framework that can adapt to the rapidly changing landscape of digital assets. This includes understanding the technological nuances of blockchain and cryptocurrencies and how they intersect with existing financial laws and regulations. The approval of a spot Bitcoin ETF would, therefore, require a significant shift in the SEC's assessment of the cryptocurrency market's readiness to meet these regulatory standards. It would mean that the SEC is satisfied with the market's maturity in terms of investor protection, market transparency, and resistance to manipulation. The SEC's role in the approval process of a spot Bitcoin ETF is a balancing act between fostering innovation and protecting investors. The regulatory hurdles faced in this journey highlight the challenges of integrating an emerging asset class like Bitcoin into the traditional financial ecosystem. The eventual approval of a spot Bitcoin ETF would signify a major advancement in the regulatory stance towards cryptocurrencies and could set a precedent for the treatment of digital assets in the financial world. The crypto world recently experienced a whirlwind of excitement and confusion following a hacked tweet falsely announcing the SEC's approval of a spot Bitcoin ETF. This incident, though short-lived, had immediate and noticeable effects on the market and brought several important issues to the forefront. Initially, the hacked tweet sent a wave of exhilaration across the cryptocurrency community. The anticipation of a spot Bitcoin ETF has long been a topic of intense speculation and hope among crypto enthusiasts and investors. For a brief moment, the tweet seemed to confirm these hopes, leading to a spike in Bitcoin's price and a flurry of activity across crypto exchanges and social media platforms. However, the revelation that the announcement was the result of a hack quickly dampened the excitement. The subsequent correction in Bitcoin's price underscored the cryptocurrency market's sensitivity to news and announcements, especially those related to regulatory decisions. This incident demonstrated how misinformation, even when corrected swiftly, can have a tangible impact on markets, highlighting the need for robust and reliable channels of communication in the financial world, especially in areas as susceptible to speculation as cryptocurrencies. The incident also raised concerns about the security and credibility of information in the age of digital communication. In a market where decisions are often made on the basis of real-time information, the vulnerability to misinformation or hacking can lead to significant financial consequences. This underscores the importance of cybersecurity measures and the need for vigilance both by information providers and consumers. Moreover, the reaction to the false announcement of the spot Bitcoin ETF approval revealed the market's eagerness and readiness for such a financial product. It highlighted the significant impact that regulatory approval of a spot Bitcoin ETF would have on the cryptocurrency market, solidifying its legitimacy and potentially ushering in a new era of growth and stability for Bitcoin. While the hacked tweet incident was a momentary episode, it brought to light several critical aspects of the cryptocurrency market. It underscored the market's sensitivity to regulatory news, the importance of information security, and the deep-seated anticipation for a spot Bitcoin ETF. This incident serves as a reminder of the complexities and nuances of the crypto market and the pivotal role of credible, secure information in this rapidly evolving space. As we look towards the future of Bitcoin and the potential approval of a spot Bitcoin ETF, industry perspectives and expert opinions offer a kaleidoscope of possibilities and insights. The future prospects of Bitcoin are not only shaped by technological advancements and market dynamics but also by the evolving perceptions of investors, regulators, and the broader financial community. Many industry experts are optimistic about the future role of Bitcoin in the global financial landscape. They envision a scenario where Bitcoin continues to grow not only as a store of value but also as an integral part of diversified investment portfolios. The potential approval of a spot Bitcoin ETF is seen as a catalyst that could propel Bitcoin into this new phase of growth and acceptance. Such an ETF would provide a regulated, accessible, and efficient way for a wider range of investors to gain exposure to Bitcoin, potentially leading to increased adoption and stability in its price. However, this optimistic view is tempered by caution from other experts who point out the challenges and uncertainties that still lie ahead. They highlight the ongoing regulatory hurdles, the need for further technological improvements in scalability and security, and the market's inherent volatility. The balance between innovation and regulation remains a delicate one, and how this balance evolves will be crucial in determining Bitcoin's future trajectory. Institutional perspectives on Bitcoin have also shifted significantly in recent years. Increasingly, institutional investors and major financial institutions are showing interest in Bitcoin, either as a direct investment or as part of broader cryptocurrency initiatives. This growing institutional involvement is a strong indicator of Bitcoin's maturing role in the financial world. However, institutions also bring a need for higher standards of regulatory compliance, risk management, and market stability. The development of other cryptocurrencies and blockchain projects also plays a role in shaping Bitcoin's future. The crypto market is dynamic and continually evolving, with new projects bringing innovations and challenges to Bitcoin's dominance. How Bitcoin adapts and interacts with these emerging projects will be an important aspect of its future development. The future prospects of Bitcoin and the impact of a potential spot Bitcoin ETF are multifaceted and complex. Industry perspectives range from bullish optimism to cautious pragmatism, reflecting the diverse and evolving nature of the cryptocurrency market. As Bitcoin continues to navigate this landscape, its journey will undoubtedly be one of the most closely watched developments in the financial world, offering insights into the future of money, investment, and technology.